the full online course. So this video is going to be long, so hopefully you guys have your pens and papers ready, because it's going to be a long course, but it's going to be straight to the point, sweet and short. So a lot of us, like, we really think that forex is really hard, when it's really not that hard. So today I'm going to basically show you a strategy that's basically going to shock your mind, and this is called the price action strategy, right? So price action, guys, is when we trade technical analysis. So we only trade according to the actions that the prices move at, right? So our strategy is based on the actual price itself, right? We work with trend lines. We don't work with indicators. We don't work with anything hectic. We only work with trend lines, and it works efficiently. Our risk to reward ratio, please write it down right now. Your risk to reward ratio should always be 1 to 3, so meaning you should be losing 1% and winning 3%, right? So that's going to be our risk to reward ratio for everything. So in terms of forex, guys, you want to make sure that, sorry about that, you want to make sure that your risk to reward ratio is 1 to 3, and the strategy is called price action trading, right? Where basically we trade in technically. This price action are applied everywhere, even on fundamentals. I do not trade, I do trade fundamentals, but I do not analyze in terms of news. I strictly analyze my fundamental news technically as well. So NFP, if I'm looking to trade NFP, I look at the overall movement of the economy, or the charts, or the pairs itself, and then depending on what my price action strategy says, then I'll have like my trade for that day, right? For that fundamental news event, right? So that's basically what I wanted to say, guys. So hope your pens and papers are ready, because this strategy is really easy. So the name for the strategy, what I said, price action strategy, by me, but I call it the 999 effect, right? Basically, you'll see why I call it the 999 effect, because we work in triples, whereby the first, second, the third touch is basically confirms any movement, right? I'll show you guys by what I mean now. So I just want to get into the, hopefully you guys are writing. I just want to get into the psychology and the psychology of forex trading, guys. So in terms of forex trading, you know that, like, I can have a 100 rand account, you can have a 1,000 rand account. If we trade the same thing, chances are that if the market chooses to act weirdly before going into the direction that we both know it's gonna go, chances are I'm gonna be kicked out and you might stay, because you have like a lot more capital, right? And you open like less positions, so meaning less risk, right? So with forex, guys, well, in terms of like your capital, guys, it's always wise to always deposit capital that you're always willing to lose, and also always go the safe route and never look to make a lot of money instantly on a certain trade. Give yourself a daily target, for example 200 rand per day, depending on the amount of capital you're going to put. So for example, when I had 1,000 rand, if I put 1,000 rand deposit, I'll know that as soon as I double my account, I'm done for the day. If I put on 100 rand, as soon as it doubles, I'm done for the day. I'm not going to look for drastic movements whereby I'm going to take 1,000 rand account and move it to 100,000 rand 100,000 rand. So that can happen, not saying that it can't happen, it can happen. But those, when you usually see that on social media with people like me and my friends and people, your forex gurus, what happens is that, guys, first they have their daily targets, and then after setting their daily targets, it is when they have enough capital to lose. They don't even care. So for example, let's say my daily target, or my weekly target has been hit. I've hit I deposited 1,000 rand. I have 7,000 rand by the end of the week. If I have more than 7,000 rand, and I made, maybe the markets gave me 10,000 rand, and I have 3,000 that I'm willing to risk, the next trade I'm going to enter with that 3,000 that I'm willing to risk, I already have my 7,000 that I made. That is my goal. So with that 3,000 rand, I'm going to risk it. So that's what you can risk. So risk only applies when you've already met your target, and even if you lose the money that you're willing to risk, you've already made your target. So that's where risk comes in. It's called risk management now. So when you see these gurus post like they've made 200,000 from 3,000, it's because they were risking. They knew the overall direction of the market when they traded, but if they hadn't reached their goal, as soon as their account was doubled, they would have stopped. But because they already met their target, they can continue and risk and see where actually the market goes until they accumulate big profits, right? So that's how it works in terms of psychology. And also your emotions, in terms of trusting your process here, you should really be strong and really know what you're doing, right? So you have to be confident even if the market doesn't go your way for a certain time, right? The market, remember, doesn't move in a pattern whereby it just goes straight into your direction. It will overall go into your direction, but during the process it will have ups and downs, right? I'm about to show you guys all of the examples here. I'm just explaining as we go. So it'll go your direction, even with this price action strategy will go your direction, but in between it will have movements whereby it might even come back to your entry point, but overall will go to your direction. So that's why you have to have the thing called what? Patience in entry points, exit points, in everything. Forex is a patience game. You do not have to trade every day, even though you have a daily target. But if your strategy is like avails itself and gives, if the strategy like basically avails itself in the charts, and the chart gives you opportunities to trade, because you can see that, okay, now my strategy is actually right here, so I can go, it says I can go ahead and trade, then you can. But it's not a must to trade every day, even though you have a daily target, guys. So remember that the market, you also always trade what the market gives you. Do not force the market to give you something. So for example, you have a daily target of 1,000 rand per month or 100 rand per month. If the market, you can see that today I'm not seeing anything, I'm not seeing any movement, do not force a trade, just relax and wait for the market to go how you want it to go, and everything will be okay. So that's just the psychology on how things are, guys. So now we're gonna start off with the basics, guys. So basically with forex, just allow me to get a brush there, give me 2 minutes. Can I make to get a brush? So basically with forex, guys, we only trade 2 movements, right? Let me remove this. We only trade 2 movements. Sorry about that. Let me just remove this. We only trade 2 movements, guys, basically, which is the uptrend. Sorry about that. Let me start again. We only trade 2 movements, which is when the market is going up, right, or when the market is going down, right? These are the only 2 movements. This movement right here is called the uptrend. This movement right here, it's called the downtrend, right? So hopefully you guys got it. We never trade when the market goes like this. When the market goes sideways, we never trade it. When the market floats like this in between, and you can see it's failing to break here and it's failing to break here, and it keeps on moving, we never. All we do is trade one simple direction, which is up or which is down. Hopefully you guys get it, and you guys will actually write it down. You said it, I'll show you guys with the example of the charts right now. So guys, because we only trade downtrends and uptrends, we can also trade the what you call the consolidations, but only via breakout. I'll show you now. I'm going to show you how you're going to trade each and every different direction, right? So on our uptrends, guys, we basically are looking for buys, right? So we trade the overall movement, but like I was saying, even though you know the market is buying, it's still gonna come down and head up, right? So you should be careful and not have nerves and you see the market retracing, right? Even if it does happen that the market comes back and retraces to your entry, right, as long as it doesn't hit your SL, then you are fine, right? And sometimes it does hit your SL, because remember, none of us know what the market is doing or where it's going. It all just depends on your strategy, right, and your accuracy and your probability, whereby price action, the probability is 80% plus, right? So yeah, right. And I remember we only lose 1% and win 3%, right? So we're always gonna lose, but we're gonna win more. That's the goal. So like I said, that the market is going up. When the market is going up like this, what we want to do when we want to enter is basically here at its lowest point. So I'll show you now what these are called. So these are basically called higher highs, and this one is higher lows, sorry. So let me just get my text tool right here. So text tool, hang on. So this is my higher low, because it's high, but it's going low as well, right? So it's high, but it's also low. And then this one, it's higher high, right? Higher high. So higher high, higher low, higher high, higher low, higher high, higher low, higher, and so on and so on and so on. So if the market is, you can see that the market is moving in an upward direction, right? And how we see the market is moving in an upward direction is that when it always comes back, as soon as it breaks this higher high, it always comes back to the higher high and shoots up and passes it and creates a next one, right? So I'll show you now with the chart by what I mean. But with upward direction, we trade on our I'm sorry about that, our entry points are on our higher lows, so that when we trade here, basically our risk to reward ratio, which is this, but I'll show you how I use it on the charts, is 1 to 3. So as you can see, risk to reward ratio is 1 right now, right? Sorry about that. It's 2, and then here it's 3. So you just see where you want to put it, right? Our SL is just below. We're losing 1%, but we're winning 3%, right? So basically something like this. I can even put it to 316. Okay, cool. So you put your entry at the higher low, and then your exit, you're basically looking at either the higher high or higher low, but overall the risk to reward ratio should be 1 to 3, so you probably exit at your 3, right? So as I said, upward direction, we only trade our buys. We only buy when it's an upward direction. So our uptrend, we only buy, but we buy when the market is giving us an HL. So we'll see this by when it shoots up. When it shoots up, we will want it, we'll wait for it to come down. As soon as it comes down, if you're not sure yet, maybe currently you're seeing this, if you're not sure yet, you see a high L, sorry, HL. So if you're not sure yet to trade, you wait for it to pass this point. As soon as it passes this point, you're like, okay, broke the higher high, so now we're looking for it to come back to a lower low. So I mean higher low, sorry about that. So it's higher low, it's going to be at the previous higher high. So you go up, and then as soon as it reaches its previous higher high, then it basically confirms a higher low. So as soon as it reaches here, this is our new higher low. You can enter your trades and risk to reward 1 2 3, right? So that's basically it for the uptrend. Same thing for the downtrend, guys. With the downtrend, what we do is basically, sorry about that, let me draw. With the downtrend, it's basically the same thing, guys. You basically trade on lower highs. Now it's the opposite. So here it's higher low, you trade you buy on higher low, and then on selling you sell on lower highs, right? So you sell at your highs because you're going down, you're going through a steep, right? So basically let me also write it out again. So this is your higher high, and then we also have a higher low. Then we also have a higher lower high, sorry, so lower low, sorry guys, it's lower high and lower low, the opposite, lower high, lower low. So this is low, but it's high, but this is also low at its lowest point. Lower low, lower high, lower low, lower high, lower low, lower high. So with a downtrend, what we want to do is enter at our lower highs. As soon as it breaks this lower low, we're looking for a new lower high, right? So it comes back, it gives us a new lower high because it came back to the lower low, which confirms that as soon as it comes back, that means it's supposed to stop here and give us a lower high. And as soon as it waits here, we basically wait for a candlestick to confirm, and then after that we just enter our trades. 1 2 3, same thing, right? So that's just like me scheming through things, right? But hopefully you guys are getting it, right? And then next, what we have, guys, is basically whereby the market is consolidating, right? I don't usually trade this, but it is you can trade like this, but I don't usually trade like this, but you can, especially on Mondays. The market likes to be like this on Monday, whereby they don't break, but they go like in, they don't have a direction, they're just consolidating, moving like in a straight line. You'll even see, I'll show you with the example with the charts where like they're moving in a straight line, right? So you see that this is consolidation. So consolidation, how we trade it is like we only trade when it breaks up or down, but as soon as it breaks up or down, it should come back, and then as soon as it comes back, this is called a retest. So that means that, okay, you know what, it confirmed this direction, but now it's coming back, so we can confirm that it's gonna create a direction of an uptrend. Here it's gonna come down, create a direction of a downtrend. It doesn't really matter as to how far it breaks out, even if it just breaks out a little like this, as long as the candlestick breaks out of the entire consolidation zone, then that basically confirms that the market has confirmed this direction. After confirming, you wait for it to retest, and then as soon as it retested, meaning that after it breaking, okay, it broke, no matter how far it goes, it should always come back. As soon as it comes back, what you do is that you don't be scared. You immediately, as soon as it comes to the zone, you immediately shoot for your buys, because it confirming that it's going to create a movement of higher highs and higher lows, right? So that's basically that's basically the movement, right? So now guys that you got the fundamentals of it and basically the basics of it, let's hop into the charts so I can show you guys the actual strategy. So for the strategy on currency pairs, we're only going to be using the 4-hour time frame, right? We're only going to be using the 4-hour time frame to basically analyze. So the 4-hour time frame is going to be for analyzing, and you can also get entry points on it, but mostly I get my entry points on the 1-hour time frame. So the 4-hour time frame mostly is for analyzing, even though you can have entry points on the 4-hour time frame, but mostly it's for analyzing, seeing the direction of the market and where to actually enter. And then the H1 is where exactly we actually move in a little more deeper and see when should we enter, right? So that's basically what I use the 1-hour time frame for, right? But this is only on the currencies, guys. So currencies, remember, it's 4 and 1 hour only that we're using. And then when we go to indices, right, we only use 4-hour and to confirm the overall direction. And then we also use 1 hour, and then we also use 30 minutes. 30 minutes, it's where we actually put in our trades now, right? So 4-hour and 1-hour time frames, they just confirm the movements. We can still enter, but because it's indices, you require a lot of capital for you to have entry points on the 4-hour 1-hour time frame. So that's why we keep it on the 30-minute time frame. So 4-hour and 1-hour time frame, we just want to see the overall direction of the market. 30 minutes is where we also analyze but actually trade on it, whereby with currencies we analyze on the 4-hour. We can look for entry points and trade on the 4-hour, but mostly the 1 hour we can that's way on currencies that we look for entry points, right? So now that I explained all of that, guys, let's head into the charts so I can show you guys exactly how I trade and exactly how this price action trading plan actually helps me out a lot, right? So we're not going to analyze all of these movements right here, but I'm going to start with USD JPY, and what I'm going to do is basically remove all of my analysis, right? So as soon as I remove all of my analysis, you can see that the market is a bit confusing, right? But what you want to do is you want to highlight the as soon as you open the market on the 4-hour time frame, we want to 30 minutes, sorry about that. As soon as you open on the 4-hour time frame, what you want to do is you want to highlight the highest point of the market and the lowest point of the market. So right now I can see that this is the highest and then this is the lowest, right? And then from your highest and your lowest, from your current highest and your lowest, right? So guys, don't be confused by going down and thinking that that's the lowest. No, you look at your current high and your current low. So this is your current high, this is your current low, this is your overall direction. Remember, it's not where we're going to be entering trade. So from there, guys, what you want to do is you want to draw a trend line. Already you can see that the market is heading in an upward direction by going up and then coming back, going up, coming back, going up, coming back. And then from here you can see that it's trying to play some gains by consolidating, right? You can see that from here the market is basically consolidating, right? And remember what I told you about consolidating, we wait for it to break. So it tried to break here, but it didn't, right? So when the market breaks, right, you basically confirm when the candle is out of these points right here that you just drew, these lines right here, when the candlesticks actually hops out and close above and above the trend line, right? So the market is recently consolidating right now, but as you can see right now, we have our lowest point in the market and we have our highest point in the market. What we want to do is we basically want to draw a trend line, right, from this week right here. So with trend lines, how we draw them is basically you draw them under wicks, right? So a trend line is not drawn like this, guys. It doesn't cut through any bodies or anything. A trend line should be from the bottom, depending on the trend, from the lowest point until the highest point, but only below the wick, right? So something like this. As you can see, if you zoom in, it's only touching the wick, guys. If you zoom in a bit, you only see that it's only touching the wick, basically the end of the candlestick, right? So with this strategy right here, what we want to do is that, like, because we already have a confirmed, currently it is consolidating, but overall it's moving in an upward direction, so we can still trade, but not now. Why I say not now? Because with this strategy, guys, on the 4-hour time frame or any time frame, we wait for 3 touches on the candlestick, right? So we have 1, we have 2, now waiting for a third one. As soon as the third one touches this candlestick, right, as soon as the third one touches this trend line, then that basically means we're going ahead and we're gonna buy the market. We're gonna enter our buys and we're gonna use the risk to reward ratio of 1 to 3, right? Because we never trade against the market, we're only waiting for a buy here, nothing else, right? We're only waiting for a buy, right? So sorry about that. So now that we have 1, 2, we play the patience game, we wait for the third one, right? So this is what sometimes happens with the market, like, all right? So sometimes you'd find that you're waiting for the third one, but only to find out that this candlestick right here basically just breaks through and doesn't give us, this candlestick just does this, for example, right? It breaks through and then it never gives us a third touch, so it just changes direction. So again, guys, when it changes direction, as soon as it changes direction, you wait for the retest. If it changes the direction on the second touch on the trend line. I know this is a bit confusing, but hopefully you guys get it. So remember I said that on the third touch is where we enter our buys, or basically where we enter our trades depending on the direction. So if I have 1, 2, 3, if I have the third touch on an upward trend line, that basically confirms I can enter buys as soon as it's done touching for the third time. If it was going on a downtrend and I had 3 touches, on the third touch I basically would enter my sells as soon as it's done with the third touch on the candles on the trend line, right? So sometimes it happens that on the second one it just breaks and never gives us that actual third trend line that we're looking for. So when it's on the second touch, especially, let's look at this example right here. So when it's on the second touch, first second, let's say it breaks, right? If it breaks, what we want to do, only on the second touch we want to wait for a retest, right? So only on the second touch we want to wait for it to come back here to this trend line, and then once it comes back and hits this trend line and confirms that it just hit this trend line, then we can enter our new change of direction, which is sells, because it gave us a lower low, and now it's giving us a lower high. And we know with the change of direction and basically with the downward trend, we only trade on our lower highs, right? So now that it gave us our lower high, we can basically trade and have our take profit right here. I assume this would be 1, 2, 3, right? So basically this is sorry about that. So that's basically the strategy, right? So this right now, we're still waiting for it to play out. This is when you play the patience game on an upward trend line. You play the patience game, you wait for it to give you a third touch on the 4th-hour candlestick. Then you can decrease and go to the 1-hour candlestick and see how many touches you have. You can see that still you have 2 touches. Remember, your candlestick should always be drawn and never cut through. It should never cut through candlesticks. It should be always below the wicks, right? So that's basically the strategy. Now we're just waiting for a third touch. If you're not seeing any movement at all, you just leave it, go to the next currency pair on the 4-hour time frame, and I'm basically going to delete my analysis here. So same thing again, we check. All right, so let me highlight the highest point of the market here, the lowest point of the market here, right? Okay, cool. What am I seeing so far, right? I can see that the market was going down here, right? But currently it's going up. So we cannot really say it's a downtrend. We can say it's a downtrend, but it changed the direction because I have that invisible trend line here. For example, like this, if I'm cutting through the wicks, let's say it was like this, we can see that it cut and now it's going in an upward direction, right? So if it's going in an upward direction, what we want to do, we want to take from our lowest point, sorry about that, to our highest point. You can see that what I meant about only the candle should only touch the wicks, right? Should only touch the wicks. We have one movement, we have one touch, and then we have another touch here. I'm just going to show you quickly. Okay, we have another touch here and nothing is cutting through. So now again we're waiting for third touch. What usually happens, guys, is that if you analyze this pair right here, and you can see there's two touches, it's USD, so you can basically conclude that every USD pair has two touches. Like we'll see, like every USD pair will have two touches. Like here we have 1 2, so meaning that chances are we won't have anything to trade as of yet, even on this pair right here. So we have to play the waiting game. So now we go to a different pair, which is AUD USD. As you can see, I already entered trades there, but I'll show you how I entered. So let's look at the AUD USD. Another note you should take: so if USD is buying against any currency pair, then if how do I explain this? If USD is buying against any currency pair, then it should sell then any currency pair should sell against USD. So it should be the opposite. So if USD is on the left, when it becomes on the right, it's selling. So if it's buying and it's on the left, then when it comes to the right, it's basically should sell. So that's what we see here. When it's on the right, USD is on this side, so it's basically selling. So yeah, guys, Forex is basically that easy. So AUD USD is currently selling. How I can see this is immediately on the 4-hour time frame. I can locate my high, my low, and I can locate my high, and then I can basically draw that trend line from here, basically giving myself two ticks, right? It's 1 2, right? We're basically waiting for the third touch here, and then we'll basically enter our trades. Let's look at the 1-hour candlestick, right? If you're seeing anything, nope, we're not seeing anything at all. We're not seeing a touch, so we're just gonna wait for the third touch, right? We're just gonna wait for the third touch. So that's basically it, right? Now we go to the other currency pair. One thing about this week, guys, it's really been a bad week to trade. This week as well, I haven't been trading a lot simply because the market is moving so dizzy. But Euro USD, it's basically moving in an upward direction, right? So let's locate again our high, and we locate our low, right? Sorry about that. We locate our low, right? We draw our candlesticks. Our sorry about that. Our trade line. So look at the tricky part now while the market is ongoing, while I'm analyzing. So remember, I told you shouldn't cut through anything, right? So because the market hasn't given me because the market is currently forming a candlestick right now, and it hasn't given me a wick, what I'm gonna do is basically place this trend line above the previous wick, which is this one right here, the previous wick. And as I do that, I can see that the market is doing what? It's basically breaking for a change of direction. So when it does this, we basically check that, okay, it's changing direction. Let's see how many touches it has done, so that we can conclude what it wants to do, whether it wants to reverse or what, right? So like I said, on the second touch is where you wait for the reversal, right? But if it's a third touch, you don't have to wait for the reversal. You can just go straight in. That's a risky trade, but it basically always works out for me. So you can see that here I already have, from the lowest candle wick, which is this one right here, I already have 1 2 3 4. So anything more than 3, you can basically trade, right? You can basically take your movement. If maybe it gave us another touch, trade it, even if it's the 10th touch. So just trade it, right? Trade the direction that it's giving you. But if it's changing a direction and it's only 6 touch or whatever, as long as it's more than 3, then you can go ahead and change direction. So right now I might actually enter this trade right now. As a sell. Risk to reward ratio 1 to 3. So I would look at my profits to be somewhere here, and then my take profit just above the trend line. So I think I might even throw the signal in the group, because it just passed this, it just passed this trend line, right? So basically we'll wait for it to play out and see what goes on, right? So like I said, risk to reward ratio is 1 to 3, but people who have a lot more capital to risk, even though I know that the market is going to come here, but because we are disciplined, we want discipline, this market wants you to be disciplined and not greedy. You basically should double your profits and then get out of the market, right? So again, it's not really going to, sometimes it does shoot down, sometimes it doesn't, but overall we know the market goes like this, up and down. Overall direction, right? So let's wait for that one to play out. We'll check it out at the end of the the class, right? So like I said right here, if on the 4 hour time frame, right, you can see that I can see that the market is basically going the it's gonna change direction, right? But I can't enter because you see this candlestick has not formed yet. That's why I head to the 1 hour time frame to see when I can enter. And basically I saw that okay, I can enter now, and as you can see, we're in small blues right there. I believe we're gonna hit our take profit by the time we're done with our lesson, right? So as I analyze other currency pairs, you will see that I did the same thing right here. The highest point and then the lowest point in the market, I basically through the wicks, nothing cutting through candles. I have how many touches? Sorry about that. I have how many touches? I have one. I have one. I have two. I don't have a third one. So here the tricky part is basically this is another form of price action, right? So you can see that I didn't get a third touch, but I still hit it for buys. So on the 4 hour time frame, I was seeing overall direction, right? But when I headed down to the 1 hour time frame, right, I could also see that like if I connect this from here to here, the market is basically, let me show you guys. So from here until here, even though the overall it is a buy, from here to here you can clearly see that we're selling, so you should be careful. So we are buying, yes, but for short term we are selling. So it's always best as well to connect your dots, even on to connect your trend lines, even when the market is going down and up at the same time, right? So overall direction is up, but you can draw your trend lines at the top of the selling wicks, right? So that you can be able to see that okay, I know overall I want a buy, but the market is currently selling. So if it's selling, the moment it changes direction on the 1 hour time frame, then I can enter my buys because it will confirm my overall buy. You get it? So I'm not saying you can trade these sells. No, these sells, this short-term sells should only confirm that okay, they're currently it's currently selling, but that's only short term because the overall movement is a buy. So as soon as it breaks the short term trend line, then I know I'm going for the overall confirmed buy, right? So that's basically what happened. So I got 1, 2, 3 touches, and then it eventually broke, and then more than 3 touches it broke. So that means as soon as it broke, I just entered. Risk to reward ratio, mine was a little bit bigger, but even if it was 1, 2, 3, I would have hit my TP right here. So that's basically it, right? And then after the market has hit your take profit, guys, what you want to do is delete and start again, right, guys? So always do that. Remember to do that, delete and start again. So now we can see that the market is overall heading up, but we can see that it's going to take a very long time for it to come back to this third touch over here on the 4 hour candlestick. That's why we minimize our chart and we look for those small breakthroughs, right? So now let's head to NZD USD. Same thing, guys. 4 hour time frame, I got 1, 2 on the I got the third one as well, if you can look closely, and then it broke, right? So this one, unfortunately, it retested. It hit my SL. You can see that I went in, but it hit my SL. But unfortunately, it retested, but support. But it also went my overall direction, but I took an L, right? But that's the market. You do have L sometimes, you know. So that's why your risk to reward ratio was 1 to 3. I lost 1%, and then I was gonna gain 3%, right? So that's very important to remember that losses are part of the game, guys. You just have to fund and trade again, guys. So next up we have is indices. Remember what I said about indices? We only trade on 1 hour, we only trade on 4, 1, and 30 minutes, right? So we're gonna start on 4 just to look at the overall direction of the market. So once we look at the overall direction of the market, we can see that this market is clearly buying. Even if you're blind, you can clearly see that this market is buying, guys. So I draw my trend line here above the wicks, and then I can see I have 1, 2 touches, so I'm still in that buy zone. And I can already see here in a short-term sell, not the short-term sell, I can, if I like what I was advising you guys to do, you can also do this, basically draw these touches right here. So you can see like this short-term sell, I have 1, 2, 3, but remember, I don't trade these short-term sells because the overall I'm going up. So because it's short-term selling, I'm gonna enter when it crosses and breaks my sell trend line, right? Or if it comes back and hits a third touch on that overall trend line. You get it? Hopefully you guys get it. So on the 4-hour time frame, I confirm my overall direction, and then I go to my 1-hour time frame, and I can basically see that, okay, cool, still the same thing, still the same movement. I'm not gonna trade. I'll basically wait for the market, right? Then you confirm again with the 30 minutes. 30 minutes is basically where we enter our trades, right? So you can see it's a bit messy, so we just leave it the way it is because the market is still doing its own thing. So right now my move would be that I'm waiting for it to break right here, or I'm waiting for it to give me this touch right here. So that means I'm gonna have to do what? Play the patience game, whereby I'll be checking my 1-hour, 4-hour time frames after hours, right? So yeah, that's basically it. So other people like me, if I have capital to risk, I can see that it's going on a short-term sell. So I know that every direction, as long as the trend line is drawn, and as long as the candlesticks hit the third touch, it confirms the movement. Like risk traders like me, on this I would enter the short-term sell. So I can see that I have 1, 2, 3. So I'm waiting for this candlestick to close. If it closes just below right here, the way it is right now, then I'm gonna enter my sells. But this is a risk trade. I'm gonna enter my sells, but it's a short-term risk trade, right? Enter my sells, place my SL right here, and 1, 2, 3 should be right here, whereby it will give me that third touch on the buy, right? So this is also risk that you can also take, guys. So this is called price action trading, guys. Basically it's very simple to analyze. Just trade on the third touch. If it doesn't give you a third touch, breaks on the second, wait for that retest, trade the change of direction. If it doesn't, if it gives you a third touch, trade immediately the direction. So if it gives you a third touch, for example, let's say this is our third touch. As soon as it's done with this third touch, as soon as it closes, we enter right here. Risk to reward 1, 2, 3, and then that's basically it, guys. So that's basically the price action trading formula, guys. But this thing has helped me a lot. It's very easy. Forex is very easy. You just have to be disciplined, and again, it's the waiting game and how you use your capital, right? So yeah, guys, hopefully you guys learned a lot. Obviously trading with the best broker, RCG Markets. So I'll have the link below to register with RCG Markets. Make sure your accounts are funded. The minimum is 50 rand, but the bigger the better, you know. So this RCG Markets, you just go to click on my link. It will take you to a form where you just fill out basically this form right here, and then you just have to fill out everything. Make sure you're compliant, over 18. If you're not over 18, you can still trade just under a guardian's account, right? So yeah, guys, that was basically the lesson for price action trading, guys. Hopefully you guys got it. So just implement that in your strategy. Remember to have trust your strategy and have a lot more focus. So do not be greedy, and also stay disciplined when opening positions. So see you guys whenever on the next course, or whenever I get to see you guys, maybe on an updated course. But shout out, it was a lovely course. Hopefully you guys are profitable, and hopefully I pray for all of you guys that you become successful. If you're watching this, just believe. If I can do it, then you can.